Hello, thanks for tuning in. I've had this question come up from time to time in regards to financing solar panel systems using a reverse mortgage, so I thought I would give some advantages and disadvantages on this idea. If you are over the age of 55 and would like to purchase, not lease, but purchase a solar panel system for your home and want to have no monthly payments and keep the tax credit incentives for yourself, you can use a reverse mortgage to buy those panels or pay off an existing solar panel loan or lease. It's April of 2022, and I'm Kevin Walton with C2 Reverse, and I do reverse mortgages in California. I mention the date because reverse mortgage guidelines and programs, as well as solar incentives and guidelines and rules, are subject to change. Solar power system costs for homes have come down over the years, making it affordable for people who want to save monthly on their power bills. You either need to buy the system outright with cash, or use a loan, or you lease. In high-cost areas of California, like where I am, a complete solar panel system complete with power walls can run over $50,000. Financing plans may be available through the solar company you're working with in the form of an installment contract, a lease agreement, or you can get a HELOC, or even refinance your existing first mortgage and pull out some cash to pay for the system. But one more option that seems to be overlooked is using a reverse mortgage to finance the system. To get a reverse mortgage, you need to be 55 years of age. Prevailing rates, age of the youngest borrower, and the amount of equity in your home determine reverse mortgage loan amounts. Recent delinquent property tax or homeowner's insurance payment history can also play a role in your loan amount as well. So here's some advantages on using a reverse mortgage to purchase a solar panel system for your home. Number one, you can choose to have no monthly mortgage payment on the reverse mortgage. Or, if you want to make payments, you can, in any amount as often as you like. On a reverse mortgage, there is monthly interest that is calculated on the money that you've used, just like any other loan. But you have a choice on whether to pay it or not. If you choose not to pay the monthly interest owed, then it gets tacked onto the balance of the loan, and when it comes time to pay off the loan, whatever interest has accrued gets collected at that time. Partial payments of any kind are allowed as well, but hopefully you already knew that. So the reverse mortgage gives payment flexibility that solar or HELOC financing can't give. Number two, it's easier to income qualify for a reverse mortgage than a HELOC, solar loan, or lease. The reverse mortgage doesn't use debt-to-income ratios that conventional lenders, HELOC lenders, and solar panel installment lenders use. A household head count and residual income calculation comes into play that makes it much easier to income qualify for the reverse mortgage. Next, any payments made on the balance owed on a reverse mortgage may possibly be tax deductible because you're making a home improvement. But you need to check with your accountant on this, since there is criteria that needs to be met before you can qualify for this mortgage interest tax deduction. Number four, when purchasing the solar panel system, you get to keep 100% of the solar tax credit and incentives, not the solar company. Notice I mentioned when you purchase the system, not lease. Number five, it's easier to sell your home when you own the system versus leasing the system. If you sell your home with a solar panel lease, there can be some problematic verbiage in that solar lease that can limit the pool of buyers that can take over the lease, such as requiring a minimum 640 credit score. Lenders don't like this and may ask that the contract be reworded before they will lend. Or maybe your buyer doesn't want to pay the full balance owed on the system, which can possibly trigger some additional negotiating on the sales price of your home. But either way, please know that these issues may not be deal breakers, but nevertheless, they can be problematic. Next, you get to claim depreciation on your system on your tax return. When you buy the system on a lease, you can't. Next, no prepayment penalties when you purchase the system and have it installed using the reverse mortgage when you buy it. However, if paying off an existing solar lease or loan with reverse mortgage funds, there may possibly be a prepayment penalty. Next, no payment escalator charges, which can be found on some leasing contracts. When you purchase outright, you don't have that. Number 9, some reverse mortgage lines of credit can stay open for the rest of your life for future usage. So even if you pay off the solar panel reverse mortgage loan, the line of credit you use to buy the panels can stay open indefinitely. On a reverse mortgage line of credit, if you choose to make monthly payments, the payments go directly toward replenishing your available line of credit for future usage, and the available line of credit grows every month, giving you even more funds to use in the future. No other loan does that. And as I mentioned before, you can use the reverse to pay off an existing solar lease or solar loan. Interest rates for a reverse mortgage may be better than a solar loan as well. I've found solar lease rates to be anywhere between 5 and 35%, depending on the down payment and credit scores. Next, the reverse mortgage is a non-recourse loan. And what this means is that at the time your home sells and the mortgage balance owed is more than the value of your home, that would mean you're underwater. A reverse mortgage lender will not come after you for the balance of the loan. On a solar installment loan, you are liable for any deficiency balance. Same goes in many states for the HELOC. You can be on the hook for the deficiency balance to the lender. And also know there are now new low-fee reverse mortgage loans and jumbo reverse mortgages that go all the way up to $6 million. So we've covered some disadvantages on using the reverse, and let's take a look at some disadvantages. First, some reverse mortgages can be expensive in origination costs. There are several types of reverse mortgages. It's important to note that. Some are more expensive to originate than others. Now, I have a separate video on my YouTube channel that goes into more detail on that. Feel free to go over there and see the different types, and you'll see some of the costs there. But just know that on the government-backed FHA HECM reverse mortgage, that's the one we see on TV most of the time, it comes with something called MIP, which is insurance required for all FHA loans, not just HECM reverse mortgages. FHA does several kinds of loans: first-time homebuyer loans, buy and rehab home loans. The HECM reverse mortgage is in the family of FHA loans, and every kind of FHA loan requires this MIP. Many people don't know that. They think it's just inherent with the reverse mortgage. It's not. It's with all FHA loans. Now, this MIP serves as gap insurance. When you owe more than the home is worth, the insurance pays the lender the difference. It protects the lender, but it also protects you and your heirs, so that way there's no recourse. But this MIP is expensive, but it is necessary. Some parts of the country don't have home appreciation like other parts, and the insurance is needed to keep the HECM reverse mortgage lenders from losing money. Sometimes people don't make payments for numbers of years, and they don't have appreciation in their area. They owe more than what the property's worth. So to keep the program solvent, the insurance is necessary. So when you add up the upfront costs for this insurance and the rest of the fees for the reverse mortgage, which are similar as other conventional loans, in a high-cost area like Southern California, it's not unheard of to see costs of $20,000 on a reverse mortgage. Now those costs, that gets rolled into the loan amount. You don't pay it up front, but nevertheless, that's the cost to originate the loan. And if you're going to get a solar panel system that only costs $30,000, then that doesn't make sense. A $20,000 in costs to get the loan, to get a $30,000 solar panel system, gotta think about that one. However, if you're adding a new roof, remodeling the kitchen and the bathroom, maybe putting in a pool, that will drive up the loan amount. Then a reverse mortgage may make more sense to finance everything into one loan. Now it's important you are presented options so you can compare side by side how each one of these loans work. We can do that for you. And if reverse mortgage does not make sense, I'm not afraid to say that doesn't make sense. Maybe a HELOC is better. And if you make large payments to pay it back quickly, a HELOC may be better. Just know that income qualifying for a HELOC can be challenging for some people. I do have an additional video comparing a HELOC to a HECM reverse mortgage line of credit on my website that goes into much more detail than what we can go into here. So feel free to go over there and you can see that. But it's important to know how each option works. The FHA HECM reverse mortgage, the new reverse mortgage that has no lower fees, much lower fees, and the HELOC, and the solar panel options. You want to take a look at all of them. Also, know that the new reverse mortgages out there that do not carry this MIP insurance, in exchange for the much lower costs, their rates are higher. And this loan is also non-recourse. I can compare each loan option side by side again if you need to see it. And I can also make a video showing an amortization table and add some commentary to it, and you can forward it to your financial people and relatives for review. We try to make it easy. Next, the reverse mortgage has to be a first mortgage. If you have an existing first mortgage, the reverse mortgage would have to pay that loan off. Then you add the solar financing amount to that amount, and you would have to have one loan. There used to be a second mortgage reverse mortgage prior to COVID, but as of April 2022, it hasn't yet come back, if it does at all. Also know that HELOCs can go behind an existing first mortgage and have less loan costs to originate them. But again, as I mentioned, income qualifying for them for some people can be a challenge. Next, all borrowers on a reverse mortgage must be at least 55 years of age. If one spouse is younger than 55, we can still do the loan, but there are some additional steps that must be taken. We can go over those on a phone call if that's the case. And last, you must have at least 50 to 60% equity in your home before a reverse mortgage can be considered. Not everybody has that. So feel free to head over to my website. You see it there highlighted in blue. Click on the calculator. Play with some numbers. Keep in mind that calculator is for the FHA HECM reverse mortgage only. The minimum age there is 62 to get that loan. If you need the 55 and over option or a jumbo reverse mortgage, please feel free when you get to my website to fill out the contact form with a brief scenario, and I can run the numbers for you and get back to you. Or you can give me a call. We can go over some numbers. So there you have it. A reverse mortgage can be used to finance a solar panel system or pay off an existing solar panel loan or lease. It just needs to make sense. And for some people, it does make sense. And while I'm no solar panel expert, I hope I gave you some useful information. This same illustration can be used when you're thinking about buying a car as well, not just solar. So keep that in mind. Please click the subscribe button on the bottom right. You'll get notified of any other videos I add to my channel, all having to do with the reverse mortgage. Again, just let me know your situation. I can run some numbers for you. Thanks for watching. And as of April 2022, I only lend in California, but I would be happy to answer any questions if you live in another state. Thanks for watching. Bye-bye.